what my strategy was going throughout the day here, and why I held on. Okay. All right. So this is a chart of the ES futures, which is the S&P 500 futures, which I use to trade zero DTE. The reason I use it is because it just flows. It trades 24/7, not 24/7, but 24/5 pretty much, and it takes kind of the gaps out of the charting, and easier to use than the SPX. Keep in mind that for during this time we were about I think 14 points difference between the SPX and the future. So you have to keep in mind when you're trading, those levels. The red lines you see here are what's called initial balance levels. That's the high and low during the first hour of regular normal trading throughout the day. Okay, and they're used for support and resistance along, and I use those along with fibs, etc. Okay, so let's get into the trade here. All right, so as you can see here that the market was moving down prior day or overnight trading, and I thought it was going to continue, but it actually didn't. But in any case, you don't know that, right? You see it now in the chart, but when I jumped in, I actually jumped in a call spread. And put on a call spread 28.85, 28.90. I'll explain the strikes and why I chose those in a minute here. But that's what I put on. You can see here that the market went against me. It wasn't hugely aggressive, and just the levels here. You can see 20. This is 28.55, 28.60. Is where the market ended up as the high, but it's just factor in about 10 points higher, or 14. It was around 10 points higher actually on the SPX. Okay, so I jumped in here, and since the market wasn't aggressively moving against me, I went ahead and waited. Okay, a while. Okay, and you can see here that I thought it was going to stop at this IBL level high here. But it didn't. It broke through, and I was monitoring the premium price. And by this time, we were about double. It was about 80 cents here, and it wasn't so bad. Okay, keep in mind the volatility was over 40 at this time on the VIX, and so I held on. Knowing that if we breached higher than 28.60, which was around 28.70. On the SPX, that I would have to take a loss here and get out of the trade. Okay, so I was expecting to do that, but as you can see here, that the market kind of stalled here. And what I do also is I watch the RSI. Okay, this indicator down here, and it gives you momentum, basically the relative strength index. Okay, and how I use it is to use it using divergence. All right. Divergence means when the market has a momentum and it's going up, the RSI will many times point out that there's a loss of momentum. Okay, and you can see here when it hit this 28.55 level, and keep in mind that I have an 85 short, right? So 28.85 short, and it was 65, so it was about 20 points away before I'd have to make a decision here. And once I saw this, I thought, okay, so we have a chance here that this is not going to keep going higher based on this divergence. And you can see here throughout the morning that the market kept going up and up and up. It was pretty good momentum higher until it got overbought here. And it was kind of a perfect setup for a reversal. And it happened. And it doesn't happen all the time. Just want to make sure that you understand that. And I was planning to get out of this trade if we would have closed above this 28.60 level, okay, which was resistance. But what happened was we went ahead and we got a lower high here, and the market went down significantly. And ultimately, I was able to let this trade expire. Okay, and I'm testing this now. I don't usually let my trades expire, but I've been testing lately. And I was allowed to get out of this trade, at full profit, full credit. Okay, I want to share with you too why I picked the 2885, 2890, and it's in this chart. Here's the SPX chart, and this is the 5-minute for what happened during the day. I don't know if you can see this, but this is 2879. And I just want to make sure you know this. So I picked the 85 number because it was above the recent, the previous day's high. Okay, and that's why I picked the 2885. I wanted to go above it because there's a natural resistance here, so that the market would have to take out that high in order to breach the position. Okay, so once I saw that that we had basically and this is where I got in, by the way. Okay, once that I saw that the position. Oh, and I do want to mention too is the implied volatility. Okay, I use implied volatility, and that's why I get in at the earliest part of the day. And you can see here. Sorry about the mark here. You can see that the implied volatility, at least for this portion of the day, right, until about 4:30 or 2:30, right, the volatility was the highest, and that's why I get into the trade. Implied volatility, you want to get into a trade on 0 DTE because the premiums are the highest at that time when implied volatility is the highest. Okay. Well, after that, obviously we had a pretty big down move here, and volatility went up. But at that point, the premium was decaying because it was very close to the end of the day, and the direction was in my favor. But you can see that from 9:30 in the morning till about noon, okay, I was trading a 0 DTE trade that was going against the direction of the trade, right? And just want you to know that these trades are high probability trades, and even when the market is going against you, directionally, okay, you can still make a profit. And I just wanted to share that because a lot of people say, well, this is a pure directional trade. It's not. Okay, it's based on implied volatility and direction. Okay, and if it's not really moving very, very aggressively against you, you have a good shot of still making a profit, even though the market's going against you. Okay, and that's what I wanted to share with you. But just keep in mind that you do need to study beforehand, those levels, and make sure you're putting the strikes at the right place. And obviously with experience, you'll be able to manage that. All right. So hopefully this was helpful and of value to you, and hopefully you'll subscribe to my channel. And we'll talk soon. The next video I'm gonna put up is I'm testing 7 DTE as well in this very high volatility market, and things are working out really well for me, and I'll be sharing that shortly. Okay. All right. Thanks, and have a great day.